GST brings with this landmark concept of invoice matching, which is the first of its kind experiment in the world. So the usual Anurag Singhal asking you to subscribe to his channel. So India is the only country in the world that is doing it, invoice to invoice matching. This is unique. People will have to comply or else they will fall out of the GST chain. So what exactly is this? So if we analyze this report on the Joint Committee on Business Process for GST, on GST returns, read along with the model GST law, the matching, reversal and reclaim of ITC can largely be understood as a foolproof mechanism which the government is trying to bring so that it completely eliminates revenue leakage in the system. So in order to check for duplication of claims, so what people used to do is that for the same invoice they used to claim credit twice. So the details of every inward supply furnished by the taxable person in form GSTR 2 shall be matched. So the moment I claim that I have made any purchase, it has to reflect in the corresponding sales of someone else, right? So whether it is a sales within India or it's a claim with respect to additional duty of customs, that is IGST paid by the recipient in respect of goods imported, whatever I claim, it has to be a match for it in someone else's ledger. Otherwise, they are going to basically deny the claim to. So the quintessential requirement for carrying out matching of ITC is that supplier has to file valid returns for the corresponding tax period and or the IGST has been paid by the recipient in case import of goods has happened. Failure to provide valid return by the supplier may lead to denial of ITC. So I have purchased goods from someone, that someone has not uploaded the returns correctly in his or her GST returns. In that case, I will not get benefit of the input tax credit unless the matching happens. It is just like Form 26AS of TDS. It's a horrid check proposed to be imposed on every taxable person. Preconditioning related to payment of tax dues. Someone has to pay those tax dues, only then I will get the input tax credit. Quite harsh also probably, but yeah, that's how it is. So in terms of provisions of the GST law, the reversal arises when there is excess claim of ITC. So I kind of claim more input than I actually deserve, or my outward supply, that's my purchase, does not get reflected in someone else's sales, that's my supply, or there's a duplication of claim. So claims can be duplicate, they can be excess, or they are not corroborated by the sales accounting. So what happens is, there's a supply of goods or services by the supplier to a recipient. There's a declaration of details of outward supply in GSTR 1. The details of input tax credit are auto-populated in GSTR 2, which is verified, validated, modified or deleted by the recipient. And then, therefore, the system will ascertain what is my eligible input tax credit, which is then uploaded by the GSTR 2 by the recipient, and therefore I can then pay the net GST. So what does the system check? It matches the outward supplies of the supplier, inward supplies of the recipient, IGST paid on import of goods and debit notes, and then the system communicates the match ITC to the recipient. So it's a foolproof mechanism. You really cannot escape by what you were doing in the earlier mechanism. So you upload GSTR 1, can include missing invoice up to 17th. Auto drafted GSTR 2A is populated based on details from GSTR 1. You generate GSTR 2 by accepting or rejecting or modifying details from GSTR 2A. You add missing purchase invoices. Supplier accepts modification by 17th, and then the net tax is paid in GSTR 3. Completely system based, you really cannot manipulate with it whatsoever. Any questions, please leave behind in the comment section and I shall be happy to answer. Thank you so much.